My name is Joe Bladek. Welcome to Canadian Mortgage Weekly Live for Thursday, July 7th at 11:30. We're joined today with Sam Thompson. We got a really exciting episode today for you all. I hope you've been excited about it. We're going to be talking about renewing your mortgage, and that's our special for the month. We'll be going all over how to renew your mortgage, all the intricacies, but specifically today, Sam, really excited about talking about how much time it takes to renew your mortgage.
Yeah, exactly. I think that it's a really good point where a lot of clients, getting the mortgage seems very straightforward, but as they creep towards that maturity date, I think there's maybe a disconnect of, when to get things started, how long the process takes. So that's what we're going to be chatting about today.
You bet. And I'm really pumped about that because I really hope that this alleviates some of that confusion going forward. I know with a lot of our clients, we sometimes even will see a mortgage renewal come up on our desk 2 or 3 days before the renewal date.
Yeah.
And as much as we would love to be able to process that and get the business, sometimes it just doesn't work that way. So let's dive right into it today. Let's talk about the 5 things you need to really consider with the amount of time we need to put aside for renewing your mortgage. So Sam, what would be the first thing we need to consider?
Yeah, so the first consideration is that ideally you want to start the process about 3 months before the maturity date. So just by doing this, you're getting ahead of the game. And you can start planning and going through the phases at a much more comfortable pace. Again, as Joe was saying, sometimes clients don't really think about it until maybe a few weeks before maturity date, sometimes maybe even, like you're saying, a few days before maturity. But that does cause a lot of stress for the client when they feel very under the gun with the entire process.
Oh yeah, they really do feel a lot of stress because there's a lot of documentation and all that needs to happen, and a lot of back and forth and a lot of, we'll talk about that in a second. But yes, definitely we need that time to do that because your lender is going to require some time to prepare the discharge of your mortgage if you're getting rid of your existing mortgage. And the new lender will need some time to prepare their documentation and all that to get the new mortgage ready. We just can't do that in 2 or 3 days. Yeah. So, but let's take a look at the next thing that we need to make sure of when you're taking time for your mortgage renewal. And that is to start a conversation and evaluate your goals. That's a big thing that a lot of folks don't really talk to me about when they're doing their mortgage renewal. They just want to know the best rate.
Yeah, exactly. And when you think about it, majority of mortgages that you're going to get, whether it's variable or fixed, it's typically going to be a 5-year term. So if you've made it all the way to maturity without refinancing or selling or making any changes, there can be a lot of different lifestyle changes, right? Whether you have different financial goals, different living situations. So it's good to chat with your mortgage professional and find out what your goals are and what is the best step to take at that maturity date when it's time to transfer.
Yeah, you bet. A lot of those goals could be, say, moving to a new city, or could be downsizing or upsizing. Some really exciting goals could be maybe taking some money out of your mortgage or even paying it down in a considerable amount.
Yeah.
Just a lot of things you can consider with that. All is really needed, Sam, is a 30-minute appointment, and we can get that done over Zoom. We can even do that over the phone. And if you prefer not to talk with anybody, because this is 2022, we can do it all over text and email if that is your preference as well. I know a lot of folks don't like picking up the phone anymore, and that's totally okay. But yes, number 3, what would that be? We'll be reviewing your options. So what would be looking at that point?
Yeah, exactly. So reviewing your options would be, a natural progression after your conversation with a mortgage professional. They're going to bring up a lot of different things when you're looking at your financial goals. And, some of those things could be, reviewing the different rates and the different lenders that are available at the time of renewal. I know, a lot of clients, if they're kind of, backseat mortgage holders, it might just be easier to, renew straight with that letter that you receive. But it's actually a really good time to review, maybe a different lender has a better product or a better rate for you.
That's a good point, Sam. Yeah, it's really good to make sure you're not a backseat mortgage holder at this moment in time, take a little bit of control of your finances and take that mortgage renewal offer that you're getting and call up your local mortgage professional, whether it be myself, Sam, Terry Lynn, or whoever you're dealing with. We would love to take a look at that document and make sure that it's matching your goals. And as well, it's something that is providing you with the most competitive option in this market. As you know, a lot of our banner banks in Canada seem to have specials all different times throughout the year. And it's not one bank that leads it all the whole year. It's quite often one bank for this week, the other bank for this week. And it's really hard to keep on top of that unless you're in the game every day. So give us a call. And the fourth thing, this one seems to take the longest time.
It really does. You would think that, the biggest part of the process would be maybe waiting on the lender or going through all these changes. But sometimes we see the longest portion is getting those documents together and getting ready for signing. I know that, sometimes it does take, depending on where you're employed or what your employment type is, sometimes it takes your HR department quite a while to get us that letter of employment so we can verify your income.
You bet. Yeah, it does take a long time. Not only for the HR department, Sam, because that does take a while, sometimes a week or two. I know sometimes certain school boards can take up to 3 weeks to get an employment letter. So good on you, school boards. And in the meantime, it's also the client. It's important that as soon as you find that you have that list available from Sam, myself, or Terry Lynn, that you take that list and you start going through it right away. You need that employment letter, send an email to your HR right away. I need an employment letter. Copy and paste what we even send to you and send that to the HR just as if we need it. So they can help you get your job done faster. And if you have an accountant, just send them the tax documents we need from your accountant. That's easy. And for most of the other documentation, you can just open your wallet and open your banking and get it from there.
Yeah, that's right. That's a very good point.
Yeah. I know, though, for myself, even when I need to do my own mortgages, as easy as that sounds, it can be still pulling teeth because finding these documents can sometimes be a pain, and logging into CRA online can sometimes take a while just to even get that password. Yeah. So make sure you do leave the time for that. It's really important. It does take a long time. But yes, in addition to the documents, what's the other item that we need to wait for?
So the last item, and as we get to the final stages, it's just the processing time to actually have the transaction take place. So again, starting with just the lender's timeline, they do need all of the documents in with enough time, as you were saying earlier, to process the discharge and to register, the new mortgage with the new lender. So we do need to give them ample time to review all of the documents. And that's, again, where by getting all those documents in as soon as you can, it really does help the lender processing stage, work out much faster and much more stress-free.
That's great. Yeah, it's a great point, Sam, because with this processing time, quite often what we see is even if we can get everything done super quick on our side, even you, the client, you're able to get us your employment letter and your pay stub and everything we need super quick, and we have it right away. Sometimes the appraiser in your area just needs an extra week or two to do that appraisal because they're all booked up and they're the only appraiser in that area, and getting any other appraiser is going to cost double and not give you an appropriate amount, sometimes a lot less. So you don't want to use the wrong appraiser. And then the lawyer can sometimes receive our file. It's ready to go. It's ready to close tomorrow. But Sam, we often get calls from lawyers saying, well, you know what? We can't close that file tomorrow.
Yeah, exactly. There's, a lot of moving pieces and a lot of different people that you're going to be, working with and in contact with. So giving all of them a buffer, again, as you're saying, does really provide it to be way less stress-free. Even if you're on top of it and you bring all of your documents to the mortgage consultation with us, there's still a few extra steps that we need to give ample time, to process and close the new mortgage.
Yeah, absolutely. Well, that's been great, Sam. Thanks for chatting about renewing your mortgage and making sure that we leave enough time for that with your mortgage process. I know that myself included, I haven't left very much time in the past for this process. So leaving the 3 months, as Sam suggested at the beginning of our episode, is a really good strategy.
Mhm.
Take that renewal letter, send it to us, and we'll see if it's a competitive enough rate for you. And then at least you can go to sleep at night knowing that you have the best mortgage that matches your goals.
Mhm.
Yeah. In the meantime, let's get right into some of the news that we have today here on Canadian Mortgage Weekly Live. We're really excited to get into that today. And to do that, let's just share our screen here. We'll get this rolling. We have some really interesting data available. All right, what we got here. So as you see here, everyone, it is episode 86. I can't believe we're at episode 86.
It's wild to think that, yeah.
Yeah. But let's look at the bond yield here. I know we've been watching this for the last, I don't know, year and a half now on Canadian Mortgage Weekly.
Yeah.
And then specifically, since September of last year, it has been on this ever so intense climb.
Mm-hmm.
Where is it sitting at today?
Yeah, so in a very short time, we did see it, increase quite a bit. And, for the month of June, at the start of the month, we saw that huge spike, which took us to about 3.5%. But since then, we have noticed a downward trend. And right now, currently, the 5-year bond yield is sitting at about 3.02%. So we have come down quite a bit from where we were at the start of June. And it does seem to be, lingering around that low mark, which, could be an indication for what's to come. And, it does actually come almost in response from, what we saw from the market in the United States, earlier on this week, the end of last week. We saw a bit of a shift there as well.
We did see a little bit of a shift. Yes, we are hearing that fixed rates are coming down in the United States, which, as you all know, Canada usually follows the United States in all things financial. So with that, we're following the United States with the increase in fixed rates. The lag time is usually about a week and a half. So I think at this point, we may see a small decrease coming soon to a fixed rate near you based on this bond yield. Now, Sam, it's really going to be the time that tells us whether or not that decrease will be for any length of time, or if it's just going to be a blip where some clients can get a special here or there on a mortgage.
Right. Yeah.
Yeah. So if you have been looking to get into the market, prices are lower right now than they were earlier this year, and rates could drop shortly. So make sure you're prepared and be pre-approved and have your documents in order so you can jump on a deal in this market. But yeah, let's take a look at the CDOR rate. I know we look at this rate here on Canadian Mortgage Weekly every week. We use this metric to calculate whether or not taking a variable rate option is a competitive option. And by looking at this, the spread is still very good.
Yeah, we're definitely still looking good. The CDOR rate has, been on a pretty steady increase. But again, as we've been seeing the increases to the overnight rate, those changes to the prime rate, it is still indicating that the variance from prime is at a good level, which does again communicate to us that the variable is still a competitive option. I know it's maybe hard to believe that when you're looking at some news articles and just a general speculation or sentiment that's in the market right now. But according to the data, it is still indicating that variable is it's a good option.
Yeah, it is a really good option. And myself included, I am in a variable rate mortgage right now for my most recent renewal. And I plan to stick with a variable. I want to be available to the future rate decreases, should there be any, within my 5-year term. I don't think it's appropriate for myself to lock in at a higher rate right now and pay the premium for that safety, because I'm on top of the market and I know what's happening, and I can see that in the future we could see a possible rate decrease.
Yeah, that's right.
Yeah, I don't want to be stuck with a premium that will have to pay a high penalty to get out of. Yeah. Something that I want to mention, though, as we get into this Bank of Canada rate announcement, and we were chatting with Zach from Century 21 this week about this as well. And what I wanted to just share with all our viewers today is that Zach had mentioned that when the interest rate announcement does come out, that in Aurelia, we do see a small softening of the market for the week or two right after an interest rate announcement, specifically if the rates go up. So any people in Aurelia looking for a house, July 13th, we do have our next interest rate announcement. And right now with the over rate at 1.50, you could be pre-approved right now before the rate announcement in preparation for this time. And if the rates do go up, the speculation, 75 basis points, it could soften the market.
Yeah, exactly. There usually is that window of opportunity almost where we do see a bit of a pullback from some consumers, and it does make it a great time to jump into a purchase right after that rate announcement.
Yeah, it's right now is a really good time to do that, to get pre-approved, just to be prepared. And as we get into the next rate announcement, please join us live on July 13th. Sam and I will be doing our pre-rate show as usual at around 9:45 with our rate announcement at 10 a.m. on Wednesday, July 13th. But just some more comments with our interview with Zach this week. We were chatting about the market in Aurelia. As you see, like the national home price has been coming down in Canada. And we'll talk about that in a second. But something really interesting is that Zach had mentioned that the market in Aurelia is actually very strong. Saying that even though there is quite a bit of inventory available, that there's a lack of inventory of nice and newer homes.
Right.
So if you're a buyer looking for that type of home, it's hard to find, and that's a strong market. But if you're a seller and you have a newer or higher end or maybe renovated home, you could do really well compared to the homes that are maybe more dated,
right?
And not really. They look a little bit more tired.
It's a good way to put it.
Yeah, good way to put it. Yeah. I'm not sure if that's the wording that was exactly used by Zach, but it's really, really interesting to see, though, because if you do have a renovated home, you could do really well still in this market. And that's considering that Zach had confirmed with us that there are no multiple offers right now in Aurelia. So that's a really good time as well for any buyers to enter into a more relaxed buying experience where they can actually have a financing condition, a home inspection condition. Isn't that nice, Sam?
Yeah, I mean, these are things that we haven't seen for quite a while just because of how aggressive the market was for all those buyers, that any sort of conditions, that offer was almost put aside because there was almost, instantly an additional offer without any conditions in firm. So it is nice to hear for those buyers and a bit comforting for a lot of home buyers to see that, the conditions are coming back in the mortgage, in the purchase agreement, that offer of purchase. And we have seen it balancing a little bit more in favor of the buyers, which, I know that this market, that's definitely something that needed to change for a lot of people to be able to get into the market.
Yeah, absolutely. So it's a great, perfect storm right now we are in where the prices have softened a bit. As we can see here, actually, we're at around 711,000, which is very close to last year pricing.
Yeah.
So you can get in at last year's prices, which is fantastic. I know you can't buy a car at last year's prices right now.
That's right.
Nor can you buy a bag of milk at last year's prices right now, but you can buy a house at last year's prices.
Yeah.
And knowing that, just to give you an idea, for a average house priced home in Canada right now, you need a family income of $148,000 with the minimum down payment of $46,000. So that's still quite a bit of money.
It definitely is, but comparatively to when we saw the market really peak in February, the downward trend is almost a 13% decrease. We've seen it drop 105,000 from the mountain that we see there, where February I think had topped off at about 816,000. We're down quite substantially in a very short window for the housing market.
In a very short window, that's right. So keep in touch with us on Canadian Mortgage Weekly Live, Canada's weekly video mortgage news podcast, as we continue monitoring this and the state of the Canadian housing market. And with that, Sam, that ends our show today with regards to the information that we're working on. Let me just load that back up there. And as we are going into that, we have our new episode next week. But before we get into that and talking about a new episode, let's talk about you, Sam. Sam, you've been in the industry for over 2 years now, living in Barrie with your wife, Grace. So it's great to have you on the show always and with your expertise. Thanks for joining us today. And I'm looking forward to next week's episode with you.
Yeah, of course. Well, thank you for having me, Joe. For anyone who doesn't know Joe, he's been in the industry for over 11 years. We're getting, just a few months away from that 12-year mark in the market, which is amazing. So again, thanks for having me on and, leading us through a lot of this information, which, you're no stranger to in the mortgage world.
For sure. And if anyone has thanks, Sam. If anyone has any questions about how to renew your mortgage and about the time you need, and if you have right now mortgage renewal coming up, even if you have 3 days left, give us a call. It may not be something that we can do for you, but we can at least look it up and give you an idea if your rate's competitive. And maybe you can go back to your own bank and talk to them about how their rate's not competitive and they need to do something for you. So anyway, thanks for joining us today. If you have any comments, questions, put it below, and we'll look forward to seeing those. And in the meantime, thanks for joining us today, and we'll see you next week.